You are listening to chartingwealth.com for October the 7th. That's Wednesday, 2015. We're looking at IYY, where we always start. That is the total market. This is an index fund that tracks the market. And what we see happening over the last 3 two-day candles, so 6 days in the market. Actually, the last candle is forming up. It's not finished yet. It's only firmed up for a day now, but we have a trend, a crossover going up beginning on Monday the 5th, and we see that the market appears to be moving up and actually bumping on the purple line that we drew a few weeks ago prior to the Fed announcement back on the 17th of September. We saw the market pretty much stop there. If we go back to our 4-hour chart, those of you watching via video, those who are listening via audio, I'll tell you what we're actually seeing. We actually have a line that we drew, a ceiling, somewhere around about $100 or so on IYY. And we see over the last 3 candles on the half-day chart, that's the 4-hour chart, we see the market bumping its head. Now, is it going to stop there? Well, we shall see. The market has lost a little bit of steam on the derivative oscillator, although the MACD is still strong in its divergence from its signal line, but the price action has slowed down. So we will definitely keep an eye on that and see if it's going to bump its head. Now, when we go back to our 2-day chart and revert over to SPY, what is that? Well, that's another ETF, an exchange-traded fund. It replicates what the action is with the S&P 500. And we see again the purple line that we drew showing where the price action had stopped starting on the 28th of August and where the market held up. Well, we're bumping that again. We have a crossover going up on the SPY, the S&P 500, similar in time frame to the crossover going up on the total market. And again, don't forget SPY represents 500 big movers in the stock market. And again, we see this bumping up on the purple line we drew here around the $200 mark. Now, if we convert over to the 4-hour chart, we see the same leveling off, not only on 3 candles, but almost on 4 candles. And again, 4 half-day candles, so 2 days of movement. Derivative oscillators lost a little bit of speed, but not much coming together at all on the MACD and the signal line. Those are still strongly apart on the 4-hour chart. But the price movement does seem to be dwindling, so we will definitely keep an eye on that. Now, could it surge again? Yes, it could. We do have confirmed up moves on the 2-day and on the half-day charts on the total market and the S&P 500. Lastly, we'll go back out to our 2-day chart. We will look at the Qs, which is the NASDAQ 100. It crossed over going into Monday the 5th, going up. It too appears to be bumping its head on this purple line. Again, on that chart, the purple line somewhere around the $106 mark or so on the Qs. Now, let's look again at the 4-hour chart and see what we see. And again, we actually see a rolling off as far as price goes and a doji ending the day. What is a doji? Well, it is a type of Japanese candlestick pattern that shows lots of indecision and indecisiveness, which could mean that the Qs is getting ready to roll over. In fact, it was down about 0.5% today. The SPY Standard & Poor's 500 was down about 1/3%, and the total market down about 0.5%. But what do these candlestick patterns mean? Well, we have a hammer that's hanging here. The market basically opened and moved down and ended the day very confused, which means that we could be seeing the market simply digesting those last day and a half or so worth of gains, and the market be getting ready to recharge and move up. But again, we have the purple line that appears to be holding it down as a ceiling. We shall watch. We are still in a confirmed move up on the 2-day chart and on the 4-hour chart. Again, the derivative oscillator is losing some of its speed, but our MACD, our primary indicator, is still strong. So let's pay attention. That price action tells us a few things, and we will continue to watch that. So we are cautious, wondering if the market's going to continue to go up. Now, if it does roll down, then of course we will watch that as it proceeds through the 4-hour chart first, and then potentially into the 2-day chart. We don't see any of that happening yet. We're still in confirmed up moves. All right, we're going to go back to our 2-day chart, and we're going to go to gold. What do we see with gold? Well, we see our 2-day chart showing us gold crossed over going up at the end of the 2-day candle on the 15th of September going into the 17th of September. It moved up, then lost some of its energy, never crossed back over going down, and is now about where it was when it lost its upward movement on the 2-day chart. But what's our favorite chart? It is, of course, the 4-hour chart. And what do we see happening there? We see the 4-hour chart once again proving its mettle. It crossed over going up on the 5th, the morning of the 5th. That is Monday. And we got a doji showing some indecision. And what did it do? It then surged up the morning of Tuesday, the 6th. And in the afternoon, lost a little bit of its energy, but is still up 1%. So our 4-hour chart is just a heck of a good chart for gold. So if you're just learning to trade, we want you to make sure that you buy positions. Well, first go in and set yourself up a virtual account at any of the online brokerage houses. They'll allow you to do that for free. They got lots of good training there on how to use their certain equipment. But what you want to do is set that up, fund it. Then you want to go and you want to start buying things like gold. And right when you see these crosses on the 4-hour chart, go ahead, make a purchase in gold and see if indeed it's a good purchase in your virtual money and if it goes up and if you've got a knack for being able to get in and make good purchases. And if indeed you start getting this down and start learning, well, then you can make your own decisions later after much experimentation, much practice, and much success. We are not a stock calling service. We do not give you any advice on purchasing anything. All we do is help you with education. And for that, I do very much encourage you to go to our website or our Facebook or Twitter page. You can find at the top of our website, same with our Twitter and Facebook pages, a 15-minute online training video that will give you the down and dirty on how to read a chart and know what it is we're talking about. A great free resource we have just for you. Please go to our website, go to our Facebook page. I believe we have it actually pinned to the top, and you can find our 15-minute training online. You will love it. It will give you a great introduction, a simple one. That's what we do. We keep it simple and straightforward. Why? Because I believe simplest is best. You can confuse yourself about so many things in the market, and you don't need to do that. You need to find a way to invest, to trade, that's simple and easy and works. And the more simple you keep it, the easier it's going to be for you to understand and to make corrections to and figure stuff out. Sometimes the charts work as they are working here in GLD, going up and down on, and again, when people hear us say, hey, the market's going down, you can sure sell your position, and at the same time, you can buy an inverse fund in gold. Again, if you're just experimenting in your virtual account, what do you have to lose but some virtual dollars? That's the best way to train. And again, if all you want to do is buy and sell virtual gold, then you can just buy and sell GLD. Buy it when it rolls over on the 4-hour chart and goes up, and sell it before it starts going down after you have a nice profit. We'll talk more about these things as we do every day. Be sure to join us, sign up for our newsletter online. Let us hear from you. Talk to us on Facebook and Twitter. We're always glad to hear from you at chartingwealth.com.